Hello, Greg.
Hi, Andrea.
How you doing?
I'm good. I'm good.
Good.
Um, yeah. Do we have any guests yet?
Yeah, we're at just under 50. So hi folks. Welcome to Humi's webinar, designed to help you navigate year-end tax season. And while we're waiting, we'll start at 3 minutes after 1. So grab your glass of water, coffee, tea if you need to. And in the meantime, just drop your location in the chat. We always love to see where folks are joining us from. So use the chat function at the bottom. And let's get to know where folks are joining us from. Ottawa, a couple in Ontario, Kawartha Lakes. Love to see the West Coast coming out strong. Lots in Calgary, Edmonton. Greg, where are you joining us from?
So I am downtown Toronto in the Humi offices today.
There you go. So joining in Toronto. I am also joining in Toronto. We have some folks joining from Kitchener, Ontario, Ingersoll, Norfolk, Ottawa, some in the US, some on the East Coast, first East Coast, if I'm not mistaken, joining. Welcome, welcome. Well, folks, while we are just waiting for everybody to join in, I would also like to call it that we are going to be posting a poll shortly. So keep an eye out on your screen when it is prompted. And I'm just taking a look at the registration numbers here before we join, where we are close to where we need to be, which is exciting. I'm just waiting for the green light from the team. Some folks joining from BC. That's awesome. Welcome. Okay. Well, with that, we're pretty close to our registration, and I think most folks are joining in. I will go over some ground rules in a moment. I see some questions already popping up, which is fantastic. So with that, let's get started. So hello, everyone. Thank you so much for sharing where you are joining in from in the chat. My name is Andrea Bartlett. I am Humi's VP of People, and I am very excited to be here today with Greg, who is going to help us understand how to navigate our year-end tax season. So with that, I would love to have our marketing team share the poll at this time. So you'll see it at the bottom of your screen pop up. So the question reads, how confident are you feeling about tackling end tax tasks? So how confident are you feeling about tackling year-end tax tasks? Try saying that 10 times fast. I definitely cannot. Okay, we'll just wait a moment, waiting for folks to complete the poll that should be showing up on your screen. And team, let's go ahead. Let's see how folks are feeling. I'm very curious. I don't know about you, Greg.
I am.
Okay. Right on. So we have a pretty even split. Shout out to the people who are feeling super confident. I envy you. I love to see it. I know Greg does too. We have over 50% of the folks who are looking for a refresher, and slightly lower than that who are looking to understand more information. So of course, that's why we're here. Very excited to be going through this to help everybody on this call feel more confident about navigating year-end tax tasks. So before we jump off, I would like to acknowledge the land, and as we seek reconciliation and new relationships with Canada's First People, one based on honor and respect, we acknowledge their oppression and struggles for justice, and that we gather on the unceded territory of the Haudenosaunee, the Anishinaabe, the Chippewa, and the Wendat peoples, and most recently, the territory of the Mississaugas of the New Credit First Nation. We are grateful to have the opportunity to work in the community and on those traditional lands. We are not here simply to utter names and move on. We are here to recognize the point of departure. We start by honoring our hosts, the struggles they have endured and continue to endure to this day, and everything that we have been privileged with on their account. In this acknowledgement, we recognize that it is one small step we can take in the progress towards truth and reconciliation. I would also like to take this time to shout out Humi's awesome marketing and CX teams who are working behind the scenes to make this event happen. So that includes Will, Steph, Evelyn, Leanne, Gabby with our marketing team, and Janelle and Samantha from our client experience team. And I will, of course, introduce Humi's special guest and resident payroll expert, Greg, in a moment. But before I do, let's go over the agenda. So what are you going to be learning today? We will walk through the tax season process and the steps that you need to take as a payroll admin. We will also, and by we, I mean Greg, we will show you how to use and comprehend Humi's PIER analysis and T4 preview report, get a walkthrough of how to enter year-end adjustments, understand Humi's T4 generation tools that help make it more streamlined, and then we'll wrap up with the Q&A. So a quick a few housekeeping notes for you joining the call. As a reminder, the webinar is recorded. I saw that question already. Love to see it. So the webinar is recorded, and the recording of the webinar and the links to the additional resources that our team will be sending throughout the webinar will also be sent to the email that you used to register. For our Q&A session, please use the Q&A feature. So you use the chat to let me know where you are joining in, which is fantastic. Please look at the bottom of your screen to the Q&A feature and use that to ask questions. That will be moderated by the team throughout this webinar. We have our payroll CX team monitoring your questions to be able to send answers over throughout the Q&A session. And if we run out of time and don't get to answer your question, you can refer to our year-end guide for all things Humi payroll during the tax season. And you can also reach out to our support team at support@humi.ca so that they can help you get there. I think the email will be also dropped in the chat so that you can quickly refer that. So with that, I would now like to introduce and welcome to the stage Humi's very own product manager payroll, Greg Caskey. So a fun fact about Greg that I actually just recently learned is that Greg comes from a payroll family. So when I asked him, Greg, what does that mean? He said his mother did payroll at a large theater company for over 20 years, and his uncle was a payroll software developer for many years. So needless to say, you are in great hands with the team at Humi, and I'd now like to pass it over to Greg to show us how Humi helps you navigate the tax season. Take it away.
All right. Thank you, Andrea. And I'll just add a quick note to that my mother, as part of her job, did unionized payroll. So all sorts of extra rules. So, you know, she still thinks I'm in kind of the minor leagues because I'm not doing unionized payroll. But you know, we're supporting a lot of business owners. So welcome everybody to our webinar. I'm excited to come and share you know, what Humi's doing to make your lives easier. I love talking about this stuff. You may hear it in my voice. I may get passionate about it, but you know, this is something that I really take seriously and take a lot of you know, joy and pride in. So happy to be here sharing it with you today. First thing I want to call it is that we know that year end is tough to navigate. So we prepared instructional resources to help you through the process. It includes this webinar. It includes our 2022 year-end checklist, which you can see a screenshot of on the screen, and our 2022 year-end guide, which is in the Help Center. Each resource goes deeper into the details. That's an important takeaway. We've got 1 hour together for the webinar. So we're going to go through a lot of key steps. We're going to go through some key steps of the product fairly quickly. The year-end checklist has a more detailed list of steps that you can take, and the year-end guide will go into even more detail on each step, giving you context and instructions where possible. In addition to these more instructional resources, we also have, I'd recommend that you read our blog that was recently posted, Top 5 Questions We Hear During Tax Season. That's a great read if you want to get an understanding of what your colleagues are asking our support team as well. And like Andrea said, everyone who's in this webinar is going to be sent these resources after. So if you see me going through things quickly, that's okay. You will be able to have access to all this information again. Okay, and Andrew's already gone through the agenda, so we've seen this. And let's move into our first step, prep for 2023. Now, this webinar, I do promise, will focus on the T4 filing requirements for calendar 2022. However, there is a key step that I want everyone to take that isn't about filing 2022. It's actually about preparing for 2023. So the key step, make sure to confirm your tax remitting frequency with the CRA and update this in Humi if required. It is that frequency that tells Humi when we need to remit taxes on behalf of your business. And this, to me, is one of those payroll steps that I think of as low effort, but high impact. It's low effort because you really only need to check this once per year and update it once per year. You do it in January, you log into your CRA My Business account. If the CRA has accelerated your payroll tax remittance frequency for your business and it's not updated in Humi, then tax payments will be made late and you will be assessed late payment penalties. So that could be very high impact depending on your business. So put a sticky note on your computer screen, put a reminder in your calendar, make sure that you do this as soon as possible. It's a key takeaway from today's session. Now, if you've never done this before, it's going to look like this. You're going to log into your My Business account with the CRA. You're going to scroll down to the payroll section and, excuse me, and you are going to look for View Remitting Requirements. You're going to click on that, and then you're going to get a screen that looks like this. What you're going to look for is, in this example, it's once every 3 months, but your remittance frequency will be bolded by the CRA. And then what you're going to want to do is just double check that that is what we have in Humi. So to do that, you would go to Company, Payroll Information, and you can see your remitter type. If you need to edit it, you can click Edit. You will see this pop up, and then you can select the appropriate remitter type from the dropdown. Now, just full disclosure, the CRA uses different terms for remitter types in different places, including on My Business account and in all their instruction documentation. I don't know why, but I would just recommend double checking, making sure that you're putting in the right remitter type. You can use the Learn About Remitter Types Help Center article if you need. So key takeaway, block some time off, make sure you double check this as soon as possible. Okay. Let's talk about the tax season process. And this is something that I've been sharing with colleagues and folks that are new to payroll, because a lot of people, they know steps they have to take, but they might not see the big picture. So I want to take a couple minutes and just take a look at how T4s are a step in a larger tax administration process here in Canada. So let's imagine Tamira, the taxpayer. Now, Tamira is ultimately responsible for paying personal income taxes on the money she earns. That's her responsibility. She's going to complete that process for a calendar year when she submits her T1 income tax and benefit return and pays all her taxes owed to the CRA. It is between her and the CRA. Now, let's imagine Tamira takes a job. Oh, I'm sorry, I've got a little head there, misclick. Let's imagine that Tamira takes a job and starts receiving employment income. This is where employers like yourselves come in. Over the time that she's working for your business, you're going to run payroll, you're going to calculate income tax, and you're going to remit that income tax to the government on Tamira's behalf. Now, as we all know, and if you don't know, that's okay, I'll tell you now, the goal of a payroll income tax calculation is to get Tamira as close as possible to owing $0 when she files her T1 return. That's the goal. Tax her appropriately, so when she files this T1 personal income tax reconciliation, it's close to zero. It's usually not. It's not going to be zero. There's just too many factors. If it's zero, it's a random occurrence. But we're going to try and get close. That's the point of the tax calc. Now, to help you as a payroll practitioner calculate the right amount of income tax, you're going to ask Tamira to fill out federal and provincial tax forms called the TD1 personal tax credits return. And there will also be a provincial equivalent for each province. She's going to fill out that document and give you instructions on how to calculate tax for her, so that when she files her personal income tax return the following year, she doesn't owe a large sum of money to the government or get a large refund. That is the purpose of those two of the TD1 federal and the provincial equivalent. Now, throughout the year, you're going to be running payroll with the help of Humi. You're going to calculate your taxes. You're going to send tax money to the CRA, and you're going to send net pay to Tamira. All right. And then it's the end of the year. This is where we are right now, where you're going to prepare a T4 statement of remuneration paid for Tamira. You're going to send her a copy, and you're also going to send a copy to the CRA. Now, Tamira is going to take that T4 form and use the information in it to fill out her T1 income tax and benefit return. That return will calculate a few things. First, it's going to take all her sources of income and total the income tax that she owes for the year. Second, it's going to total all the income tax she's already paid during the year through payroll deductions with your help. And third, it's going to calculate the balance of tax owing or the tax refund. Okay, so that's what the T1 is going to do. She's going to take that T4 that you're going to provide for her in the next 6 weeks, and she's going to use it to fill out her T1. Now, to summarize, the preparation that you're going, or the T4 preparation that you're going to complete in the next 6 weeks is part of this larger process. I think it's really helpful if everyone understands kind of this larger process and how we as payroll practitioners play an important part. I think one of the keys to this is that this system includes reconciliation after the T4 is filed. That's an important thing to know. And it also means that the most important part of the T4 process is accurately reflecting what happened during the year. Yeah. All right. So I hope that's helpful. I've seen eyes light up when I've shared that kind of process before with folks. So it's probably some of you already are familiar with it, but hopefully it's insightful for some of you. Okay, so let's talk about the T4 process itself, because it can be complicated. So we've put together this flow chart to visually represent the reconciliation process that you're going to complete as part of preparing T4s. Now, I'm going to go through this document, and I'm going to use some abbreviations, but we're going to go through each in more detail as we go through the presentation. So first thing we're going to do is we're going to conduct a self-PIER audit using Humi's PIER analysis reports. And that is going to help us ensure that CPP and EI deductions are accurate and as expected. Then we're going to run a T4 preview report to make sure that earnings, taxable benefits, and deductions have been set up accurately. Then, depending on what we find in those two, the actions after might be different. Now, we won't be able to go through all potential corrections in this 1-hour webinar, but I will show you our year-end adjustment tool, which you may need to use after your PIER report or after your T4 preview report. If you discover a variance in your PIER report or realize something is wrong in the T4 preview, you can use the adjustment tool to modify pay item amounts and tax amounts prior to generating your T4s. It's the adjustment tool, it is a powerful tool, so use it carefully. Also, whenever you use the adjustment tool, it's important to restart the process. And that's why this flow chart is always saying, if you need to address variances and you do that with the adjustment tool, great, come back here, run another PIER report. you've you've done your T4 preview report, you've realized that there are some values that you need to correct, you correct them on the adjuster, great, go back, start the process again, run a PIER report. That may sound like a lot of work, but we believe we've made it a relatively simple and stress-free process. So it's strongly recommended. When you've completed this process, you've run your reports and you've used the adjustment tool to make any corrections, then you will need to make additional payroll remittance, or you may need to make additional payroll remittances to the CRA if you have changed any tax amounts. And you'll see what I mean when we go through the example. Once we've done all that, then we're ready to enter the T4 workflow. Okay, so we're going to come back to this flow chart. But first, let's see it in action. Okay, so I'm going to get it a full screen here, and we're going to go to Humi itself. So, we're going to go to the pension and insurable earnings report. So I'm going to show you how to get there first. It's under reporting, payroll, and PIER analysis report. Now, before I click into this, some of you may have received a pensionable and insurable earnings review from the CRA in the past. If you haven't, you may be asking yourself, what is a PIER report? What is Greg talking about? Well, each year, the CRA checks the calculations, the CPP and EI calculations, by matching the pensionable and insurable earnings that you reported with the required Canada Pension Plan contributions or employment insurance premiums shown in the payroll deductions tables. That's their language. Basically, what it means is they are double checking the math. The CRA is going to compare the total required amounts of CPP and EI that they have calculated against what you've reported on your T4 slips. If there is a difference between those two, then the CRA will send you a PIER notice. If you get one, don't freak out. A PIER isn't an angry tax letter from the government. A PIER is a request to explain a discrepancy. And there could be some justifications for these discrepancies. One common example is that you have an employee who turned 18 in the middle of the year. So they weren't subject to CPP, and then they became subject to CPP. That is something you might get a PIER report for. And you would just have to explain that, and you won't owe the government any money. In a lot of instances, you may get this PIER report, and you may review it, and you may realize, yes, the variances are true, and then you are required to make payment to the CRA. So nothing to be afraid of. It's just they've reconciled it, and they've realized that you owe them a little bit more money. That's what a PIER report is. It's basically double checking the math. It's a reconciliation process. But we do recommend that you use the report to check for any PIER variances before running your T4s. You can make the adjustments before submitting your T4s and avoid that CRA letter, 10 months into the future. So to do that, we're going to navigate here. Let's jump into the report, actually. So to do that, we're going to navigate to reporting, payroll, PIER analysis report. And I'm going to open this up. Now, the report by default goes to the current year, or the year with the most recent payroll. So you're going to want to come over here and just filter it for the year in question, 2022. And here we are. The columns that are going to be of greatest importance to you, are going to be the CPP variance, employer CPP variance, EI variance, and employer EI variance. Now, many of you will see small variances like you see on my screen here for a couple of cents. This is caused by fractions of cents that accumulate throughout the year. You're running payroll, you're going to run anywhere between 12 and 53 payrolls per year. And over the course of that many payrolls, fractions of cents are being rounded up and down. and that can result in these small variances. The CRA will not send you a PIER report over fractions of cents and small variances like this. They won't. They have a threshold above which or below which they consider it acceptable. They won't tell us what that threshold is, so I can't tell you what that threshold is. You will have to use your discretion to determine the amount of variance that you're comfortable with. Now, if you are reviewing this report and you see a variance that appears to be more than rounding, so here's a good example. Alex Smith has a CPP variance of $8.32 and an employer CPP variance of $8.32. If you see this, you may then choose to investigate what is the root cause of this variance. Is this a legitimate variance that is okay? And I will just explain it to the CRA when I get my PIER report, or should I enter an adjustment for it? The root cause is going to be different depending on your business situation. So you will have to investigate. Now, we have put a few columns over here to the right that speak to exemption flags. If the user was exempt from CPP or EI, that could be causing the variance. Or whether or not a year-to-date adjustment has been made, that also can be the root cause of the variance. These are some common causes. I would also recommend that you can check out our year-end guide or our blog for more examples of common causes that may result in a variance. But again, the actual root cause is going to be something that you will need to determine. If you are digging in and you're trying to find the source of the variance, people often ask us, what's the best place to look? I would say the payroll year-to-date report is a great place because you've got a breakdown of the employees, the pay periods, the line items. So first place I'd go if you're looking is the payroll year-to-date report. Okay, so we're here and we've identified Alex Smith has a variance of $8.32. Let's go make an adjustment for that. Let's say for the sake of this presentation, I've looked into this and determined that this is a legitimate variance and we need to make a correction. What I am going to do is I am going to go to payroll. I'm going to go to records. And I'm going to go to year-end adjustments. Okay. Now, this gives you the ability to make adjustments independently. And like I said before, it's a powerful tool. So use it with care. First thing you're going to want to do is select the appropriate year from the dropdown. Now, this particular tool becomes available in the new year for the previous year. So you can't make adjustments in the middle of the year with this tool. So yeah, just be aware of that. I've got the right year here, 2022. Now we are presented with a table that includes all employees we paid in the selected year and all types of pay items that they received during the year. Okay, so you're seeing regular pay, bonuses, commissions, etc. Now, I said pay items. That's a little bit of an internal jargon here at Humi, but I want anyone viewing this to think of it like this. If something was on an employee's pay stub in the year, then it's going to be shown on this adjustment tool. That's the best way to think about it. If it was on an employee's pay stub during the year, you're going to see it here. Now, all values will be 0 by default. And this is because no adjustments have been made for this year just yet. Okay, so what you would want to do is you would want to find the employee who needs the adjustment and enter the required information. So in this case, it was Alex Smith. And we saw that Alex had a variance of $8.32. So I'm going to come in here and I'm going to make my adjustment for negative $8.32. And I am going to put it in the right column because this is a powerful report and I'm using it with care. Negative 8.32. Okay. And you can see that once I've entered the value, it is saving automatically. And that's it. it's fixed. Alex's employer CPP variance will be 0. We're going to go back to the PIER report and check that out. But I want to point out that we are going to need to remit some additional money to the CRA in this case. All right, so I'm going to show you how to do that later. A couple of things to know before we leave this tool. It is very flexible and it is constantly editable until you're satisfied with your PIER report and your T4 preview report. Okay, so you can make an adjustment, go check your PIER report again. If you see that there's another issue, you can come back here, make another adjustment, check your PIER report again. You can go through that as many times as you need to. It's designed for those multiple changes. Also worth noting is that the tool will not calculate the taxes on pay items you add or subtract. So if you were to come in here and let's say you were to add regular pay to Alex, it's not going to calculate income tax for Alex. It's not going to calculate CPP or EI or anything like that. That would be your responsibility as part of the adjustment workflow. Okay. And then last thing I want to share about this report is that once you enter the T4 generation workflow, this report will lock. And that's because once you go into the T4 workflow, basically we've used all this data. It's in use and can't be changed anymore. So I've made the adjustment and let's go take a quick look back at our PIER report. So I'm going to go back, reporting, payroll, back to my PIER analysis report. I'm going to run this again. I'm going to filter for the appropriate year. And we can see that Alex's variance has been fixed. Great, amazing. We have got through this part of the flowchart. We've run our PIER, we've found our variances, we've fixed them with the adjustment tool, and we've double checked our PIER. Let's move on to the T4 preview report. Okay, so with the T4 preview report, I'll get to it here. It's in the same spot, reporting, payroll, T4 preview. And this report, before I jump into it, it's going to allow you to review T4 details in bulk. So first thing I'm going to do, I'm going to open this up. And I'm going to scroll through the report and just show everyone that this is a box by box breakdown of the T4. So you can see, you've got your employee information, you've got your box 12, social insurance number, 10, province of employment, all the way down, you've got your 14, employment income, and so on and so on and so on. It is a box by box breakdown. I would also like to point out a couple of columns. We have included these two columns, employee status and email, within this report. And this is to help you identify any employees who may be at risk of not receiving their T4. Now, what you're going to see in the T4 workflow later on is that Humi will allow you to bulk email T4s to all recipients. And your employees who are receiving those can access their T4s with a password that includes their SIN. Now, we've seen and heard feedback that sometimes employee profiles may contain a work email address for terminated employees. Excuse me. It can, yeah, if this were a work email address and the employee was terminated, then they will not have access to that email anymore. And that puts them at risk of not receiving their T4. So here you can quickly review if you have any individuals who may be in that position, and then you can choose how you want to handle it. Maybe you will choose to go to their employee profile and update their email to a personal email that they have access to, or you may choose to print out copies of these T4s and mail them directly to employees. Really up to you to determine how you want to include it. So now, what else might I use this report for? we've looked at it. It's a box by box breakdown. What might I look at? Let's say you want to review your benefits that your employees received during the year. Maybe you just got a reconciliation from one of your benefits vendors and found out that the value of your employees, non-cash benefits was $100 for the year for each employee. You may want to come in here and just double check to see that that is going to be on your T4s. So I'm going to scroll through and I'm going to find box 40 for taxable benefits. And then, oh, I see, I don't have those on here. That is something, that is one of the things you would want to use this report for, to make sure that the values you expect to be present on the T4 are on the T4. Now, if you find you need to make a change like this, let's say you needed to add taxable benefits for this employee, you're going to circle back to the adjustment tool and you're going to make that correction. Just like very similar to what we did with the CPP a few moments ago. Now, earlier I said that if something was on their pay stub in the year, it will show in the adjustment tool. That is true, but we've actually gone a little bit further. So additional income items, benefits, deductions will also appear in the adjustment tool if the employee is actively set up to have those on current payroll. So if you were to get in here and you were to see, oh my goodness, I forgot to add this benefit to my employees in the tax year, but they did actually receive the benefit in the previous year, so I know I have to report it. You could just set that benefit up today, and it will be available to you within the adjustment tool. Okay. And yeah, so you would do that. You would navigate back to the adjuster, make the required changes. Navigate back to the adjuster, make the required changes. You can also edit employee information if you find that, for example, in this example, one of my employees doesn't have an employee address. I could also update this in the employee profile, and it'll appear here. So you would make any other corrections, whether it's with the T4 adjuster or the employee information, and then you would circle back. Go back to your PIER report. You would again check for variances. You would adjust them if you needed to. You'd rerun your T4 report. You'd make sure your values are correct. You'd adjust them if you needed to. And then you'd come back and you would get here. Did you use the adjuster tool? Well, in our example, we did, right? We added $8.32 of employee and employer CPP to one of our employees, Alex Smith. That means we will have to make additional payroll remittances on the CRA website. And okay, so how do we do that? Payments to the CRA. This next part's a little bit outside of Humi system, but I'm going to share it because we get questions about it. Payments to the CRA can be made online in a variety of ways. If you Google this or if you've ever tried, you'll see that there are multiple methods, but I would say do not let that trip you up thinking, oh, like which one's the right way to make payment? The right way to make payment is the one that pays the CRA on time and works for your business. Okay. I am going to go over one method that has worked for me, both in my past experience as a payroll practitioner and also in supporting my my lovely wife with her small business. So the method I'm going to show up here, we're going to go to the Canada Revenue Agency website. But before you even get to this step, what you are going to need is the total value of the payment to be made, the CRA payroll account number that the payment will apply to, and you will also need access to online banking to actually make the payment. Okay, so you're going to come to this website, canada.ca/en/revenue agency. And then I'm going to click through about 10 things here. So if you're frantically scribbling, remember this is recorded, so you can come back. It's a lot of clicks to get to the right place. But when you're at the Canada Revenue Agency site, you're going to come down here. You're going to click Payments to CRA. payments for businesses. I'm going to go up here to make a payment. And then we are paying payroll source deductions today. So I'm going to select payroll source deductions. I'm going to click continue. Then I'm going to go down here and use my payment. And I find this the easiest because it allows us to make Interac online payments, which is basically an online banking workflow that I think most of us are familiar with nowadays. So I'm going to click my payment. This explains what you will need to make this payment. You can make it with, your online banking or a Visa or MasterCard debit card. I'm going to click Pay Now. I have to click Payroll Source Deductions again. And then I'm going to click Payment on Filing. Clicking Payment on Filing is basically saying to the CRA that, hey, I'm reconciling my T4s, I'm getting ready to file them, and I've realized that I may need to make an additional payment. That's what Payment on Filing means. I am going to come in here, and this is where we need that information I said we would need going in. We will put in our CRA RP number, just putting in a fake one here. You will put in the period end date, and this is going to be December 31st of the tax year you're reporting for. In this case, we're talking about 2030 or 2022. And then I'm going to put in the total value that is due to the CRA. Okay, and then I would click next to continue the process. If I click next, the website will block me because this is not a real payroll account number, but I can tell you what to expect in the next stages. You will click next. It will ask you to confirm the amount and the details and then proceed to pay. You'll click pay. It'll ask you to confirm the payment method. I personally prefer online Interac payment, and then it's going to navigate you to an online banking workflow for your financial institution. Once you do that, you will receive a receipt or a transaction record from the CRA that you'll keep for your records. Okay, so this is not the only way to make a payment. It's just one that I've found to be the most straightforward, and it's worked for me in the past. Okay, so let's go back to our handy flow chart. We are here. We've made additional payroll remittances to the CRA. Now let's enter the T4 workflow. So to do that, I will go to payroll, records, tax forms. And this is it. At this stage, you've run your reports, you've reconciled your data, you've reviewed your T4 preview report, and you're ready to generate. Go in here, click Generate 2022 T4s. Click to open them up. And here you are going to see a list of all the employees who have a T4. And at the bottom, you're going to see a summary of the T4 values. You can click into an employee, and from there, you can see all the details specific to that employee. You can click Preview and Review to see a PDF version of the T4. In the top banner, you're going to see that you're going to see a peer review calculation. This is very similar to the review, to the report we ran earlier. It's the same logic, same calculation back there. Just another opportunity to double check. Now, if you're in here and you determine that employee details need to be updated, you can click Edit, and then you can update employee details. Keep in mind that these edits are only being made on the T4, and they're not being made on the employee's profile. So you can use it, just keep in mind the employee profile is still going to say what it said before. That is not being updated. If you determine that one of the money fields needs to be updated, and this wasn't done with the adjustment tool, you have one final opportunity to do it here, but you will have to do it one employee at a time. So you would come in here, you would click Edit, and make changes as required. Keep in mind, if you're changing tax amounts in here, again, you may have to make payment to the CRA for any tax amount changes that you've made here. So do keep that in mind if you choose to go about it in this way. So you would make the changes, let's say income tax deducted was 31. I would make the update and click save. Now, if you are in the process of making changes to editing an employee, whether that be the details or the tax amount, and for some reason you become not confident in what you've entered, maybe you got distracted, maybe your instant messenger had a fire you needed to put out, and you don't remember where you left off, you can come back here, you can click these three dots and you can click revert to original. That is going to basically remove any of the changes that you've made to this document and put it back to the way it was when you first opened it. It just gets you back to zero and you can make changes. You can begin making your changes again. Similarly, at your T4 batch level, you can delete your batch of T4s at any point before clicking finalize by clicking on the three dots and clicking delete. Now this will delete all the generated T4s in this workflow or for the year. Now, whether that's a useful function for you as a user depends on where you're at in the process. And I want to be clear about this. On the good side, it can enable you to use the adjustment tool if you need to edit T4 details for multiple employees. If you've got in here and you're like, oh my goodness, I forgot that my benefits provider was going to send me information. I've got a list of 100 employees I need to update a benefit for. You might choose to come in here, delete your T4 batch, and go back to the adjustment tool and update all employees at once. But do keep in mind that the downside is that if you've already made individual edits to the T4s already, then you will lose those edits when you click delete, and you're going to have to circle back, do those again. Okay, so that's the balance that you'll need to decide what works best for you. When you are satisfied, you've reviewed your T4s, everything looks good, you can come up here, you can click finalize T4s, and you're going to have to acknowledge three things. First, that the info is correct, that you understand that this will lock your T4s for the year, and very importantly, that you acknowledge that you must download and submit the T619 XML document to the CRA, and that is what actually completes the CRA filing for your business. So you click those, click save, and you can see I haven't fulfilled all the requirements. Greg Caskey is missing an address. So I'll go in here. And 123 8th Street. It's a required field. There we go. And I'm going to go in here, finalize my T4s again, verify everything, click save, and that's it. Congratulations, you've completed your T4s in Humi for 2022. So that's it. Andrea, I'm sure our guests have a ton of questions. So let's get into them with the time that we have left.
Absolutely. We have been answering some of them on the fly, and I know the
Great.
team is still answering them live. But Greg, starting at the top, one of our participants has asked, what is the best practice for TD1s? Should employees be requested to fill them out at the start of every year?
First thing I'm going to do is I'm going to answer the question, but I'm going to answer it based on my memory. So what I would actually recommend is that you check, Government of Canada resources to get the actual answer for this. To the best of my recollection, they do not you're not required to get a new TD1 every year. I believe the only time you are actually, as an employer, responsible for getting an employee to submit a new TD1 is if they've actually marked themselves as do not withhold income tax. I think that's the only time that you as an employer are legally required to collect a new TD1. But other than that, I'm pretty sure it's just at onboarding, and if the employee chooses to update their TD1 forms. That's off the top of my head, so qualifying it a little bit. I would recommend just going online, checking with the Government of Canada to see what they say the requirements are.
So to clarify, the best practice is at onboarding, and they are not required to complete one every year.
Yeah.
Okay, perfect. Thank you. So Greg, next question. Do I need to make adjustments for positive amounts in the PIER report or negative amounts only? What if the variance is only a few cents?
Okay. Do you need to, let's answer those questions in order. So do you need to make adjustments for positive variances or just negative variances? I would say that is at your discretion. That is at the discretion of the payroll practitioner of the business. The important thing to keep in mind is that any variance, positive variance or negative variance, can trigger a PIER report. And the government's going to ask you to explain the variance and then settle up any money that is either owed to the government or owed to you. So it is your discretion whether you choose to do both positive and or negative variances. The sense, what was the second question again, Andrea? Can you repeat that?
Yes, so they were asking, what if the variance is only a few cents?
If it's only a few cents, I wouldn't worry about it. So in my example, we saw, I think, 2 up to 3 cents. I wouldn't touch that. That's rounding errors. That's fractions of cents accumulating over many payrolls throughout the year. The government's not going to send you a PIER report for that. I would love to be able to tell everyone that below X dollars and cents, the government doesn't care. But I just can't do that because they won't tell us. So it is your discretion. But keep in mind that, what we saw in our presentation today, 2-3 cents, I wouldn't worry about that.
I would also add, Greg, that it's very normal to have this conversation with your finance and accounting team to understand what kind of threshold. Is it 2 cents? Is it 10 cents? Is it under $5? Ultimately, that's a business decision between finance and the payroll practitioners.
Absolutely. Absolutely. Great. Thank you for adding that.
Yeah. So Greg, the next question. So the top 5 questions blog, which is a blog and a resource that we'll share after, says that anything above 0 is overage. The example that you showed, Greg, was an overage, but then you edited the year-end report by making the total a negative. You said that the amount was due to the CRA, but the PIER report showed that it was positive. What are they missing?
So I will say straight away that this is it can be difficult to wrap our minds around the plus minus here. I I know that in the example I provided, I know that in the example I provided, that would have been additional funds due to the CRA. And that's because I know how I set it up. I think the best way to think about this, the best way to think about the adjustment tool is that you're indicating net amounts going to the employee, like adding net amounts to that employee's pay stub and pay record for the year. So I subtracted dollars from my employee. If I've subtracted dollars from my employee, I don't keep those. I got to send them to the government. I feel like that is the simplest way to keep it in mind, or to simplest way to keep all the plus minuses in mind as you use our tool.
Perfect. Okay. We are running out of time, but we have just a few more questions that we are working to answer. So, Greg, will the terminated employees receive their T4 by personal email addresses?
So they will receive it to the email address that you see in your T4 preview report. If you see the employee's personal email address in there, then they will receive it to their personal email address. If you see an employee's work email address in there, they will receive it to their work email address.
Okay, great. And this question has to do with working from home. So do we need to create T2200 forms for employees who are required to work from home for tax purposes? Or is this created on the employee's request?
I am going to have to decline that question. We don't provide T2200s as part of Humi's tools. This is really something you want to talk to your finance department or your accountant about, because there are a lot of rules around the T2200, and it's just not part of our product. So good question, but I'm going to have to decline and point you elsewhere.
Exactly. Okay. Well, folks, we are here, 3 minutes left. Our team is still actively answering some of your questions in the Q&A chat. I know some folks are posting in the general chat. Again, use the Q&A function, and our team will be collecting all of those questions before we do wrap up the call. And with that, I would like to take this time now then in order to say a few thank yous. So, Greg, unless there's anything on your end, I will go ahead and wrap up today.
I think I'm just going to finish with a little bit of advice to all the folks on the call. T4s, they're complicated tax documents. Give yourself some time, ask your teammates for some space to really sit down and focus on this process so that you can do it well and properly. It's a lot of numbers. We've made it as easy as we can, but these are tax documents. So give yourself the time and take it slow. Reach out to our team for help. Use our resources, but you've got this. You've got it.
Sometimes we can psych ourselves out before we even start working on something.
Absolutely.
Yeah.
Half of our respondents said what was the first option? Not very confident or something like that.
Yeah. Yeah.
First time, use our resources.
Exactly. Okay, well, folks, that is it. We hoped that in attending today, you're now feeling more confident and refreshed in the year-end payroll tax season preparation. Thank you to everyone at Humi, including our marketing team and our fantastic CX team. And Greg, thank you so much for your time today. Thank you all for joining, learning, listening, and asking so many questions throughout today's webinar. And a reminder, everyone, that this call and the resources from today's webinar, including the video and any support links and ebook guides shared today, will be sent to your email following today's webinar. Follow us on LinkedIn and check out our socials to learn more about Humi's upcoming webinars for 2023. And with that, we hope that you have an awesome rest of your Tuesday. Take care, everybody.